Welcome to HouseLux Estate, your number one source for all things finance and investment. We're here to help you navigate the thrilling world of wealth creation, offering insights into real estate trends, stock market fluctuations, and investment strategies. Our goal? To empower you with knowledge, helping you make informed decisions on your financial journey. From first-time investors to seasoned market players, we've got something for everyone. Today, we dive into the world of gold investment. Strap in and prepare for an informative journey. Gold, treasured by civilizations for thousands of years, but why should it be a part of your investment portfolio? Let's delve into the gleaming world of gold investment and its benefits. First and foremost, gold acts as a hedge against inflation. When paper money loses its value, the price of gold typically soars. This is because gold is a tangible asset, something you can hold in your hand, and its worth isn't dictated by the whims of a fluctuating economy. Next up, let's talk about diversification. If you're looking to spread your investment wings wide, gold is a brilliant choice. It has a low correlation with other assets, meaning it often moves independently of the stock market. This can provide a safety net during economic downturns when stocks and other investments take a hit. Finally, gold's universal acceptance is a powerful motivator for investors. No matter where you are in the world, gold is a recognized form of wealth. It's easily traded and can be converted into cash swiftly, making it a flexible investment. But it's not just about the practical benefits. Gold carries an intrinsic value, a deep-rooted allure that has captivated humanity for millennia. It's a symbol of stability and enduring value in a world of fleeting trends and volatile markets. Clearly, gold can be a solid addition to your investment strategy. But how do you get started? Stay tuned as we delve into the types of gold investments in the next scene. Before you invest, it is important to understand the different ways you can own gold. Now let's delve into the various types of gold investments. First up, we have physical gold. This is the oldest and most traditional way of investing in gold. When we talk about physical gold, we're referring to gold in its tangible form, like gold bars or coins. What's appealing about this type of investment is that you have direct ownership. You can see it, touch it, and even store it in your home if you so desire. But remember, owning physical gold also requires secure storage, which can come with additional costs. Next, we have gold exchange traded funds, or gold ETFs. These are funds that track the price of gold. When you invest in a gold ETF, you're buying shares in a fund that owns physical gold. You don't physically own the gold, but you do have exposure to its price movements. This method is a popular choice for those who want to own gold without the hassle of storing it. The third type of gold investment is gold mining stocks. This option involves buying shares in companies that mine for gold. The value of these stocks is influenced by the price of gold, but it's also affected by the performance of the individual mining companies. This type of investment can offer higher potential returns, but also comes with a higher level of risk. Lastly, we have gold mutual funds. These are managed portfolios of different types of gold investments, including gold stocks and ETFs. This diversification can help to spread risk, making this a potentially safer option for those new to gold investing. Each type of gold investment offers its own set of advantages and risks. Your choice depends on your investment goals, risk tolerance, and your personal preferences. Whether you're drawn to the allure of holding physical gold or prefer the convenience of gold ETFs, there is an investment type that suits your needs. With a clear understanding of the types of gold investments, you're ready to make your first gold investment. Investing in gold can be a straightforward process. It can be as simple as 5 key steps: researching, choosing, finding, purchasing, and if necessary, storing. Let's start with the first step, researching. This is where you immerse yourself in the world of gold investment. It's crucial to understand the current market trends, the historical performance of gold, and the factors that influence its price. These factors can include global economic stability, inflation rates, and supply and demand. Remember, knowledge is power. The more you know, the better your chances of making a successful investment. Next, we move on to choosing the type of gold investment. As we discussed earlier, there are several ways to invest in gold. you can buy physical gold in the form of coins or bullion. Alternatively, you can invest in gold mining stocks, gold mutual funds, or exchange-traded funds. Each type has its own set of advantages and risks, so it's important to choose the one that aligns best with your investment goals and risk tolerance. The third step is finding a reputable dealer or broker. Whether you're buying physical gold or investing in a gold-related financial product, it's critical to work with a trustworthy and reliable source. Look for dealers or brokers with positive reviews, transparent pricing, and a proven track record. Be wary of anyone offering deals that seem too good to be true. They often are. Now, we're ready to make the purchase. If you're buying physical gold, you'll typically pay the dealer directly and receive your gold in return. If you're investing in a gold-related financial product, you'll purchase it through your broker. Either way, it's important to keep all records of your transaction for future reference. Finally, if you've decided to invest in physical gold, you'll need to consider storage. You have a few options here. You can store your gold at home in a safe or safe deposit box. Alternatively, you can use a professional storage service. This option often comes with insurance, which can provide an extra layer of security. However, it's important to weigh the costs and benefits of each option before making a decision. Of course, these steps are only a guideline. The world of gold investment is complex and ever-changing. It's important to stay informed and flexible, ready to adapt your strategy as the market evolves. And with that, you've made your first gold investment. But what's next? Let's move on to our next scene to find out. Like any investment, it's important to keep an eye on your gold. Monitoring your gold investment is not just about observing the price movements, but also understanding the market dynamics that influence these changes. The gold market is impacted by various factors, including economic indicators, geopolitical events, and even investor sentiment. So whether you're investing in gold bullion, ETFs, or mining stocks, it's crucial to stay updated with the latest market trends and news. Reassessing your investment strategy periodically is another important aspect of monitoring your gold investment. The investment landscape is constantly evolving, and what worked well for you in the past might not be the best strategy moving forward. Therefore, periodic reassessment allows you to adjust your investment strategy based on current market conditions and your financial goals. Now, let's talk about selling your gold. The decision to sell is just as crucial as the decision to buy. And just like buying, timing is everything when it comes to selling. Knowing when to sell requires a keen understanding of the gold market and your investment objectives. Remember, gold is considered a safe haven asset, meaning investors often flock to gold during times of economic uncertainty. So, if the economic outlook is positive and market sentiment is bullish, it might be a good time to consider selling. However, it's important to note that selling should not be a reactionary decision based on short-term market fluctuations. Instead, it should be a strategic move aligned with your long-term investment goals. So, don't rush into selling just because the gold prices are temporarily down. Take your time, do your research, and make an informed decision. In conclusion, monitoring your gold investment involves staying informed about the gold market, regularly reassessing your investment strategy, and knowing when to sell. It's not a passive activity, but an ongoing process that requires time and effort. However, the rewards can be substantial if done right. By diligently monitoring your investment, you can maximize your returns on gold. Today, we've taken a golden journey from understanding why to invest in gold to monitoring your gold investment. We've delved into the compelling reasons to consider gold as a safe haven for your assets. We've also explored the diverse types of gold investments, from physical gold to gold ETFs, each with their unique advantages and considerations. We then navigated through the steps to invest in gold, emphasizing the importance of research, decision-making, and execution. We also underscored the significance of regularly monitoring your investment, adjusting your strategy as necessary according to market trends and personal financial goals. Remember, it's imperative to do thorough research and, if needed, consult with a financial advisor. Investing in gold, like any investment, requires a well-informed and strategic approach. That's it for today's Golden Nugget of Wisdom. Don't forget to subscribe to House Lux Estate for more insightful investment content. Until next time, happy investing.